Toronto condos are selling in the 300,000s again. This hasn't happened in years. Condo prices are 9% below pre-COVID prices, down about 5% year over year, and continue trending down. But before you call the bottom, there's one big problem. Here's what's actually happening. Toronto sales are down about 15%. Active listings are up. Studios and small one bedrooms are or had seen some of the biggest price declines, allowing them to get into that 300,000 price range. Rents are also falling. Average one bedroom rents are down roughly 4 to 6% year over year. And here's the key. National Bank's Housing Affordability Monitor shows that there's still a massive monthly payment gap between renting and owning a condo in the city of Toronto. So yes, prices look more compelling, but the idea that this suddenly creates a shortage or buyers are going to rush back in, it's probably a long shot. We still have years of pre-con inventory coming through the system. The economics of renting are still far better than owning. And so today I'm going to break it all down. I'm going to talk about where the pain is concentrated, why small units were getting hit the hardest, why affordability still isn't fixed, and whether this is actually an investable moment for Toronto condos. And if you're still trying to decide whether to buy or rent right now, I'll show you exactly how to calculate that using a tool that we built for the podcast at realist.ca. It actually accounts for discount rate, what you'd be investing your money in, dollar cost averaging, any of the payment differences into stocks, etc. Anyway, let's start with the official numbers from the Toronto Real Estate Board. So in Q4 2025, 3,800 condo sales, down 15% year over year. Average price, $650,000, give or take, down 5.1% year over year. Active listings rose year over year. So basically, your supply is outpacing your demand. Demand is weak, supply is building. Buyers have the negotiating power in this market. That is not the setup for a supply shortage that might create a recovery. If anything, we probably still have more downside risk left in the market. And the Toronto Star dropped this report on Treb's data, and they show the distribution shift, and like they have some really beautiful visuals in here. During the pandemic, basically nothing traded below 400,000. Now the $400,000 to $500,000 segment makes up a meaningful percentage of total sales. Studios and one bedrooms are 41% of all sales combined. Why? Because these were the investor-driven units. And when interest rates went up, when rents softened, when appreciation stopped, investors raced for the exits. Now we have a glut of small units that end users don't really want. These are accessible price-wise to first-time buyers, but as you'll often hear people saying from a qualitative perspective, we spent a lot of time building units that not a lot of people wanted.